Welcome back. You are listening to another episode of keepthechange.co.nz's Money Mail. As always, I hope you're doing well out there, continuing to learn more about money and make progress towards your goals. To start with, you've got to have some. So if you haven't worked through Money Mail 2, which is one of the OGs where we go through the month in progress and look at budgeting and why maybe that's boring, but we do it in a sexy way, designed to keep you thinking about money coming in, money going out, assets, liabilities, your net worth, and then whether you're making progress each month. But you've got to start by understanding what are you doing all this for, and then build some big reasons to do that. Now, just on that, I noticed that the roads were very quiet here in the 09 in Auckland on Friday, the day between Waitangi Day and the weekend. And I asked people on social media, well, actually, I put up a quote, but I think people thought it was a question. And the question was basically, who gave you today off? Was it your employer or your goals? Now, I worked on Friday, and partly why is because I'm trying to get closer to my goals. So that meant that I had to work. Now, I'm not saying, yeah, what a fucking hero, mate, going to work on Friday when other people didn't. Don't you know you could have had a 4-day weekend, bro, chill out, etc. When you start to set bigger goals and go after things that you want, then it's easier to make sense of when you need to work, when you don't want to work, how you want to structure your life, and things like that. So part of the reason that I think a lot of people do kind of gravitate towards what's the maximum days I can have off per year is because we're not thinking big enough to start with. Like, that's what we're thinking about. We're thinking, okay, I don't want to be working, I don't enjoy this, therefore how can I escape as much as I can from work? So then we don't want to work, so then we're looking for ways to do as minimal as possible. But once you start working on something that you really do like doing, or start getting closer to a goal, or have a goal, then it's easier to make sense of doing work and you start to spot more opportunities. As an example, for some people, they would have spotted Waitangi Day as a day that they could earn time and a half to then pay their mortgage off faster, because their goal is to clear that faster. Whereas for some other people, they'll be like, you shouldn't have to work on Waitangi Day, that's so shit, that's a day off, we should be celebrating the country, etc., etc. But this is the beauty of the country. Like, no one's forcing you to do it. You get to choose. And I think that how I see so many people struggling to make sense of why they can't be doing better is that they're caught in kind of the general information and looking for all the problems and why things aren't happening for them instead of looking for solutions. But part of why they don't look for solutions is because they don't have goals to start with anyway. So if, for instance, you buy a property and you have a mortgage for 30 years, then basically society has told you that's how it works. And so then you accept that that's how it works and this is what you need to repay and this is your rates and whatnot, and then you mold your life around that. But if someone just walked into your house and said, hey, what are you doing? This should only take 15 years to pay off. You'd be like, what? What do you mean? And you have a circuit breaker. And then you go, yeah, it's possible. You go, well, is it? Yeah, let me show you how. And then someone shows you how, and you go, oh, well, I hadn't even thought about that to start with, that it could be 15 years. And then if they get you to the point where they're like, okay, let's make it a goal to do it in 15 years, then you've got to go and do that. So then you start to work backwards and be like, okay, well, what are some of the answers? Okay, we need to not spend money on those things. We need to increase our income. Okay, we need to look at doing these things. And because you now have a goal, your actions become clearer. So that's why I'm often banging on about goals and stuff, not to be like, fuck yeah, what are your goals for 2025? It's a new year, new me, all that shit. It's get things in your life that you like working towards to pull you, to give you some momentum, because most people, they only push hard when life gets tough. And when there's, it's a good example at the moment is the conversation has gone so far from like, fuck yeah, I'm jumping between jobs, I can earn way more money, this is epic, etc. Do you notice now it's like, I applied for 400 jobs, this is ridiculous, I can't believe it. And some people are even saying to me, oh bro, like where's the content around, skills to what you could be doing if you got made redundant? I'm like, man, we were talking about that 2 or 3 years ago. I'm really sorry, but for a lot of us, like we knew that this was coming. The Reserve Bank even told us this. But now, and it's no shade on those people, and if you're new around here, you're thinking like, well, what the fuck, well, I haven't been here for 2 years, that's completely fine too. The point being that already, when you're tuned into what's going on, you can start to see it ahead of it happening. You're like, okay, I need to ensure I have solutions. So you start to get yourself ready. So that's why some people who listen to Keep the Change are saying, holy shit, like, I'm so glad I got myself ready. I've got an emergency fund there. I was increasing my skills. I've been able to make a bit of income as well to get us through. And, that's brought me some time, and it hasn't been as stressful, the fact that I lost my job or I don't have as many hours, etc. And so they've gotten themselves ready. Whereas for other people, they're now like, well, I need to start learning about the economy. I need to start learning about financial literacy. I need to start learning about, why so many people are applying for these jobs too. How come even me, I can't get a job? What's happening? I thought I was really good. And the whole thing has just swung. So now a lot of people are looking for solutions. And what will happen is that some of these people, they will then get another job and they will go, oh, wicked, life's back to normal. I'm sweet. I can relax. I'm comfortable again. Whereas some people, a very small percentage of people, will be like, fuck, I cannot let that happen again. That was my wake-up call. I need to increase my understanding around skills, how to stay employed, how to be valuable, levers to increase my income. How do I build up some cash reserves should this ever happen again? And we'll go down a completely different path because they're driven and they've got goals and they're thinking about, okay, my goal is if that were to happen again, how can I be prepared? Whereas someone else, or most people, will just be like, phew, that sucked that there were other people applying for the jobs. I can't believe it. I've got no idea why. But man, I got the job. Epic. Life's good again. Yeah, back to the buy now, pay later, the holidays and stuff. They don't, life won't really change. It'll just go back to what it used to be like. So again, think about goals and what's important to you and seasons as well. You might not want to do working on Waitangi Day or the day after or whatever. You might get yourself to that point. It's like, yeah, I did all the work so that I don't have to do that stuff. But again, we've got to figure out where are we in our journey and not just let society be like, okay, here's how it rolls. Find ways that you can get closer to your goals by taking ownership and figuring out what you can do, not what society or your employer, etc. suggests that you do. Anyway, complete tangent, as we often start with these money mails. But we need to get rolling because this is a goodie. Put it on the mortgage, dead in 2024. How many of you have heard this saying in your lifetime? Put it on the mortgage. Now, this hasn't been as loud recently, and we'll get to some data later on. But I'll unpack what this means, and we'll go through some of the context. So with lower interest rates, think prior to interest rates rising and rising house prices, why wouldn't you put it on the mortgage? Put it on the mortgage basically means borrowing against your property and extending your mortgage so that you could have or do more shit. And for years, many New Zealanders have tapped into their home equity, borrowing against their property to access cash. Now, equity is the difference between the property price and the debt. That is your equity. And sometimes the banks will let you borrow against that and draw down some more debt so that you can go and do stuff. Now, of course, if you qualify, you can use the funds however you choose and repay them over time. Of course, you still have to repay them, but ideally you're repaying with an income that keeps up with inflation or beats inflation. So let's just go back before the pandemic and go, right, interest rates were decreasing for some time and house prices were increasing. Other sayings, property doubles every 10 years. So if you think about it, and some of you would have been through this, your cost of debt was getting cheaper, your income was increasing, and your house was increasing in value. That meant that you felt wealthier. On paper, you are wealthier. So your equity is increasing because your property is becoming worth more. Your income is increasing. So then you can pay off your debt faster to speed up the growth of the equity. And the cost of the debt is getting cheaper. We're getting right down to 2s and 3s in the pandemic, remember? Now, what does that encourage? It encourages people to go back to the bank and go, well, I can afford to service more debt because my income has been increasing. This debt is cheap, and we've got quite a bit of equity in this property. We would like to unlock it. So baby boomers have lived through a big period of this. So for them, it was very common to go to the bank and say, hey, I want to put this on my mortgage. And I see stories and asks to mortgage advisors where basically baby boomers are like, hey, I've got a holiday coming up, I've got kids going to this school, we need a new car, etc., etc. Can you please get me some more debt? They obviously don't use those words. They're like, can we put it on the mortgage? And so then the mortgage advisor or the bank is like, okay, well, let's work out whether You can service the new debt, whether that's even applicable for them, whether you've got enough equity and whatnot. And for a long time, like that is what was and has been fueling the economy, because then you get more debt, and then you go out there and you buy the car, you put the kid into the tuition, you have the family holiday or whatever, and so money gets spent. So when interest rates are low, borrowing costs for all of us decrease, making it super tempting to borrow against equity. So people build up enough equity, and then it's like, right, well, let's go borrow some more. And people have done this for renovations, cars, trips, school tuition, consolidations of other forms of debt. Why do we have 3 credit cards? This is kind of silly. Let's put it on the mortgage and clear the 3 credit cards. Now, rising equity has long been part of New Zealand's financial landscape. As the currency devalues, property prices tend to increase, creating more equity. Now, let's just pause there for a second and just go back to pre-pandemic. Okay, house prices keep going up, and we always learn that in New Zealand, but people are not doing anything with those properties. So why are they becoming worth more? You've got the small percentage that are like, well, actually, no, we put the deck in, we put a spa in, we put a 10 grand spa in, and it's gone up 50 grand in value. Okay. How does that? So does the market value that spa 5x on what you paid for it? Doesn't really make sense. Wouldn't you buy the property 50 grand cheaper and then put the spa in for the 10 grand? But no, like the teaching is we did the renovation, we did whatever, and then the market values it at more. And that is what is happening. But there's not often like logic behind it of like, why are you paying another $50,000 for that place with a spa when you could just buy a similar place and put in a $10,000 spa? But this is what creates, value, and in the eyes of somebody purchasing. And if they can borrow and service it, then the bank will create the money in the debt and say, there you go. So then, you have people that are like, well, no, my property went up and I did nothing to it at all, but it was because I bought really well at the perfect time. And then you're like, okay, but what did all the other houses around you go up by as well? Well, they don't care. You don't even need to think about that, because you've got equity that you can now use. So you're wealthier and life feels good. Then you've got people that are like, no, it's because way more people came to the country and therefore like it's driven up demand. So I was really smart buying my house like ahead of that happening. Okay, like maybe, but I don't know what the answer is. But these are all the arguments you will see when you continue to look at like why do house prices go up. There, I think, is a naivety to the fact that it's not always like what we've done. It's what's happening out there in terms of the amount of debt that's being created and the ability to service this debt. And now we've had a good lesson where, if you think about it, the run up to interest rates increasing, people were climbing over themselves to get into the property market, etc. And now property prices have come back 20% from that because interest rates are dearer. And but not too many other things have changed when you look at those arguments. Some people are still doing renovations and whatnot, but it's definitely decreased. We'll look at that later. But, people have still been coming to New Zealand. The population's growing. So, like, how come prices are decreasing? Debt's gotten more expensive, so then less people can buy and afford to service the debt, and incomes are becoming stagnant. So, we've had a slowdown in house prices. But people won't be able to see all of that. And for me, I'm not like, we don't need to get to the fucking root cause of exactly what's going on, but at least have some baseline understanding of it and have a bit of humbleness to be like, okay, maybe I didn't really do anything in that time whilst that increased, and also everything around me got more expensive. Now, recently, I put on the story an example of a baby boomer who you could tell like actually kind of sees what is going on out there, and they are in their 80s. I believe. So I'll try and find that and I will read that to you. But I had so many messages on the other side of it where people are like, wow, I can relate to this. And I think it's almost a topic in itself where, well, I'll get to that once I read it. But basically, much to celebrate. So we're talking about the article is about how first home buyers have got a lot to celebrate. So it says much to celebrate. I'm sure that for many, there would have been a sense of relief, but they are still having to pay absurd prices for the privilege of getting their own home. They are now shackled to mortgage payments that for most will eat up much of their combined incomes. I am old, almost 80, and when I and all my friends bought, I'll get the email from the person, hey bro, stop saying brought, man. Fucking hell, accounting, not English, okay? But anyway, all my friends bought we were able to find properties at 3 times our income, and our wives did not have to work, though almost all did, but stopped when children came along. Now, a second income is essential, and the children have to be farmed out very early on. I'm certainly not saying that everything was better in the old days, but some things really were better in my view. Now, they say that their properties were 3 times our income. Now it's like 6 to 9, So it takes longer to repay the debt. But of course, like most baby boomers were like, no, we had high interest rates. And then we get into that whole argument, like who had it worst and whatnot. But then there's a comment, a reply to this is basically says, exactly. And many of the new mums I know now aged 35 to 40, because remember, we're buying properties later as well. The average, but baby boomers like won't talk about this. Yet you were buying properties in your 20s with one income and having kids. And now we're buying properties when we're 35, 37 and can't afford multiple kids. And both of us have to work in a relationship to be able to afford it all. Fuck, something's broken here. But then baby boomers like, no, we had higher interest rates and you guys are like doing more stuff and going on OEs and you got bigger houses and stuff. So you're never going to there's never going to be a definitive answer to that either. But you just want to look at it and be like, okay, how could I have a more wider conversation than kind of who had it better and whatnot, and really what the fuck is going on here? So exactly, many of the new mums I know are now aged 35 to 40 are extremely stressed, often suffering from burnout or chronic fatigue, a number are the primary household earner. So now it's very common for the woman to be to earn more than the man. And as more girls than guys go to uni now, I don't know if that stat's true or not, but I would imagine it's probably fairly accurate, don't really have the energy or capacity to deal properly with the kinds of things when they get home, as their heads are elsewhere, or vice versa, can't be fully focused at work as they're worried about the kids, and a number are on antidepressants because of the strain they are under. How fucking sad, of where society got to, and where we're at, and I can't really see it getting better, and that's why this education is designed to help you be like, shit, okay, what do I need to be thinking about to sort of get ahead of it? Because when you think about it, you've got an 80-year-old being like, okay, we could buy a property 3 times our income, and the wife didn't have to work. Sometimes they did, and they could have multiple kids, and they could look after the kids and whatnot, and the man was the breadwinner. And I'm not saying that that's how it should be or shouldn't be, etc. This is just what this person is saying. And then someone else is like, well, look at the mums now. And then I had multiple mums messaging me being like, yeah, fucking can completely relate to this. And how sad now that, well, there's 2 things. One, I kind of think it's sad that, there's a lot of women who are now being told, to be a girl boss or to be really high up in a company or focus on your career and do all these things. And some of them probably I don't even fucking want to do that. But they're kind of forced to because we broke money so badly and shit got so expensive and house prices are so expensive that we're like, oh, but to have a similar life to prior generations, we have to. So I think there's a whole subsection of women who have been pushed into careers and shit that they don't even really want to be doing. And if they were really honest, they'd be like, you know what? I want to be at home with the kids, and it would be great if my husband or partner or whoever could go in, earn the money, and it was enough for us to have an epic life, and I didn't have to worry about all this shit or worry about getting behind on my career and stuff. And the skeptic in me is I wonder if that's what we said to women, to a lot of women that don't even want to do that, just to then hide from the real conversation of, yeah, because deep down, we've fucked up how money works, and so you're gonna have to do it. So we'll tell you that it's really empowering to go and do that. But then a whole heap of women are going to end up in roles that they don't even want to be there and doing that shit. But then they're kind of being forced by society or told by society that they should be. And obviously, I'm a bloke, so I appreciate that. Some women are probably going to be listening to this, being like, "Don't speak on our behalf," and I'm not doing that, and I'm trying not to do that. I'm just, when I look down at this, I'm like, oh yeah. And then because I'll have conversations with some of my friends who are women and stuff, and they're hard on the career and stuff, and then deep down it's like, fuck, we don't even really want to be doing this. And I'm like, oh wow, I wonder if it's because, did we get remarketed to that's what you're supposed to do, but you don't really even want to do that, but you're kind of forced to because of the cost of everything. So fascinating thing to think about, and something that I think like even I'm kind of scared to talk about that because I'm a dude. I think if I was a woman talking about that, it would be, a lot easier to have that conversation. But, sometimes I'll have that conversation in my household with my partner, and, then we'll talk about the other side of like, okay, yeah, but, you got people who may have kids and then they're like, but I want to go straight back to work because I really do like it and I find fulfillment in it, and they want to do that stuff. And that's epic. I guess what I'm advocating for, or what I would like to see, is that it's like doable again, and that there is choice, and that you're not forced into doing something that you don't want to do. So I think my point there is that I do think there are people forced to do things they don't actually want to do, but are kind of being marketed to that they should be doing it because it's like what you do now, and that's just fascinating for us to think about as a standalone. But anyway, if we then go back to kind of the numbers, you've got the 80-year-old being like, okay, it was 3 times and whatnot, and then you've got, women and the male partner, or male and male, and female these days that, have children, but then they both have to work, and the home price to income is like 6 to 8 times. But then the fascinating thing in this as well is that the baby boomer is like celebrating how much their house is worth. We've done really well out of property. And then the next generation are like, fuck, we are busting our ass, both having to work. We can't afford multiple children. I'm burning out, etc. But all good. Like, at least you guys got your property that's worth heaps so you can feel real rich on paper. Quite buzzy when you think about it, eh? Like, quite scary. And then it's like, okay, well, how's that happened? And we don't, like, I don't claim to know all of the answers and really, really understand it, but you might want to then, go down rabbit holes of like fractional reserve banking and the dollar coming off the gold standard and things like that. But really, it is where we are, and it is what it is, which sucks. And you have to then understand that what happens to then the next generation, and do these things change? And how can you have a more wider conversation around some of this stuff? So I've put in here, put another way, currency devaluation, because how we got here, was talking about, people kind of celebrating their house prices going up without really thinking what's going on. And then we've just segued massively into that combo. But anyway, currency devaluation means that the value of money decreases over time. And you guys all know that now because you've seen all this money get created out of thin air, pumped into the system. And what did people do? If you've been listening for a while, it was like, you got to get some before it ends up all in assets. Because when people see money get devalued, they're like, okay, I need to store it in something that's harder. Whether it's like gold, or some people like Bitcoin these days in New Zealand, it's property. And property prices in land, they tend to increase, or at least stay the same, because there's, there's a perception that there can't be more, but which that doesn't really make any sense either. Because if you think about it, they could just build 100,000 fucking properties out of the ground as apartments. So you can actually create more houses. So then does the land and houses actually have the value that people think that it does? And the answer is therefore no, because you can just create way more of it, and it can be done. But there's still the perception that, we'll land, like you can never get, then it's like, no, you can never, there's only so much land. But you can like build land these days as well. But anyway, that's what we do, right? We don't think to that level. We're just like, fuck, money's losing its value. I need to invest into assets, whether it be property or whatever. And property is the thing in New Zealand because we're so, against shares and stuff, and we've had the 1987 crash. So of course, like baby boomers have gone property, and then they've seen prices increase in that space as well. They've been able to then borrow against them. Their lives have been very good. Their interest rates have been decreasing. Their incomes have been increasing. They've had a beautiful period where this has worked so well. But ultimately, you and I are faced with the fact that like the currency is losing its value, and people are then trying to stack it into things, so then those assets become more expensive. But realistically, for homeowners, and I'm not like, I'm not having a go against any, I'm just like trying to paint the picture of, this is kind of what I've tried to figure out, what the fuck is going on out there. But for homeowners, this equity is a powerful tool, one that those without property can't access as easily, because this sort of brings us to that too. If you don't then have property and you're not on this train, well then you can't really benefit from, borrowing against these assets because you don't have them. So then you kind of get left behind as well. So then that's why it's, the convo's like, the sooner you're on the ladder, the better. Because what people are, without probably even realizing it, what they're trying to say is like, you're decreasing your likelihood of being left behind of how this entire economy is built. And will it continue this way? Like, we don't know, but recency bias would suggest that yes, it is. So of course people are going to be like, quickly you got to, because they think that they're like making more money and that it's becoming worth more. But really, or part of it is that the money's been like devalued. And so they're trying to store their money, and then they see the house price increase and it's like, okay, yeah, I fucking clocked this. Like, I know what I'm doing here. I better tell other people, like, you need to do the same thing. And so the cycle sort of continues on. But at the moment, we've got like a 2-year backward period where it's not really working. So rising equity can fund sudden expenses for people, even like business ventures, even further rental property investments or household improvements. Some people even leverage their equity in this day and age to help family members buy their first home. So this is very, very powerful equity. And, people often talk about leverage and equity when it comes to property. And this is kind of why, because the system is built to be able to leverage off of your equity. Without home equity, securing large sums often means turning to personal loans or credit cards. And even the business space, it's hard if you don't have property to borrow against to get a cheaper rate. You end up paying like 12% for vehicle finance or 30% for unsecured finance to try and bring your business to reality. And, individuals, if they're not doing business, but they don't have property and they've got things they need to do and there's an emergency, what do? Like, we turn to personal finance and other forms of debt and credit cards for us to be able to do that. So we're still doing it, but we don't have property, or people that don't have property don't have equity to borrow against. They borrow against their earning ability. So a lender goes, yeah, okay, we'll give you a credit card, we'll give you this finance, we'll give you this buy now, pay later, because it looks like you're going to be able to earn enough to pay us back, so the risk is decreased. Therefore, here you go, we'll give you money ahead of you earning it. So people are sort of doing the same thing in that space, but the rate is dearer because it's riskier. Because, as you know, safe as houses has always been the thing, because this is how property works. Whereas with income, you could lose your job, you could get ill. Like, there's way more variables and risks that could happen. That means that the lender can't then get their cash back. So you're going to have to pay a higher rate. Having the ability to draw down on property equity offers a massive financial flexibility. Some people even look at their home equity as a giant emergency fund or backstop. And that goes back to the story that I was telling earlier about mortgage advisors saying, people will say to them, hey, I want you to apply for debt from the bank for me to do X, Y, and Z. And that's how they look at it. Oh, well, the equity is their backstop. And people, as realistically too, look at their property equity as their retirement plan. And that's it. Like, okay, we'll clear down the debt and I'll get to 65 and I'll be mortgage free. But then if you've been doing more learning, you'll be like, okay, yeah, then what do you do though? How much is the pension? What are your outgoings going to be? You're still going to have rates and things, and insurance and things like that. Do you not insure anymore? So you got to sort of question some of these things that you're learning at a high level and go a bit deeper and be like, okay, how does this play out? And this is something that I do all the time with clients when I'm working with business owners, next advisors. If they've got like a new product idea or they're going to hire someone or whatever, we're like, okay, let's play it out. Like, instead of doing the exciting thing and hiring or launching the new service, we play out, okay, what happens? Let's go down for a year, 2 years, and this thing's growing. Like, what does it look like? And then we walk down the path and we start doing numbers and things, and it all becomes a bit clearer. But many people don't do that. They just kind of stay at the simplistic level. And hopefully this content encourages you to think a bit bigger. And one way to do that, if you know a mortgage advisor, ask them a story of people using equity in their home. Say to them, because they live and breathe this world, say like, hey, I'm just interested in this space. Like, what do you see people using equity in their properties to do? Have you got some stories for me? And, they'll probably tell you about financing large investments, purchases that might otherwise be out of reach, might be buying a business, might be solving a family emergency, but get their stories and find out from them, like, what are you seeing? Now, of course, this can only really be done in the right settings. So the bank in the right settings are all too willing to lend the money against the property. However, if it is worth remembering that there are specific rules around how much of your equity in your current home you can use and what debt you can service based on your income. So there are rules that sort of restrict this as well, and sometimes those rules can change, and we now have like debt to income ratios and things that might slow all this down. You also need to understand the long-term implications of taking on more debt. And for a long time, putting it on the mortgage, you haven't really needed to, because, like I said before, house prices were going up, debt was getting cheaper and incomes were increasing. It's the perfect storm to not even need to care about taking on more debt. Now, while immediate access to funds can be tempting and beneficial, adding more debt to your life can lead to significant financial commitments, stress, and pressure. Some people love that and they enjoy debt and they're cool with it. Some people hate it. Borrowing against your home increases your overall debt, which can be risky if your financial situation changes. And a reminder here, this is not financial advice. I'm just covering some of the basics of what I've seen and learned, and with dealing with business owners as well and seeing what they go through when they go and speak to the bank. And whether it's getting a rental property or using equity in their property or borrowing against their property for their business and things. So I see this as well. But you must ensure that you can comfortably manage the increased mortgage payments over time. And the bank will stress test you on this when you're accessing the debt. So they will be thinking about this because they don't want to lend when there's risk involved. If property values drop as well, you could owe more than your home is worth. And we're seeing that recently with negative equity, which is where the property is worth less than the total mortgage value. And baby boomers were like, oh, you don't worry about that, it just increases over time. Sweet. Well, tell that to someone that's young that's like, fuck me. How did I time it where the time that I brought, my house is now not even worth the mortgage? This is scary, and that's going to weigh on your mind. Now, hopefully that corrects itself over time. But how does it correct itself? Well, it corrects itself by properties increasing in value, which still continues to create more issues elsewhere in the system anyway. And we're creating even more debt to push up the price of those properties. So there's risks and there's ups and there's downs everywhere. Before taking out any form of debt, whether it's like against your property or whatever, have good, strong conversations, and especially if you're going to take out debt against your property, seek professional advice to weigh up the benefits and risk based on your individual circumstances. Don't just kind of see shit on social media and be like, oh, fuck, they borrowed against their property to buy a car. Like, we should do the same. Get some proper advice and figure out, are there different ways to do it? Now, should I open up this can of worms? No, I won't do it. Okay, so here's a few things to think about. You want to ensure you have a stable income and a clear understanding of your financial situation too, before any form of debt. And you want to think about how will you service this debt if your circumstances change? Because we all get excited for like borrowing money in the here and now when income is like this, but what if things change in the future? What if one person loses the job, etc.? Think about whether doing this, like borrowing against your property, even fits in your long-term goals. Or are you just doing it because someone else did it? Because we're going to go back into a phase eventually where people borrow against their property and it's the thing to do. Putting it on the mortgage has been household slang for many years. People are still doing it, but not much in 2024. And this is exactly why we're talking about this, and I wrote this and obviously record this podcast. Now, think about 2024. Prices were flat in property. This meant that there wasn't much equity being created. So now you're going to tie it all together and be like, I see. Fuck, this is okay. So this podcast will teach you so much. So here's a recent interest.co.nz article. Using the house as an ATM is out of favor, and now only 11% of new loans were of that type. In 2019, it was almost 20%. Since the data series began a decade ago, mortgage top-ups were the lowest ever in 2024 and declining during the year. So if you think about it, flat house prices, debt still expensive, income's not increasing too much, unemployment increasing, people are like, fuck, I'm not going to put it on the mortgage. Too scary, too expensive, no equity to do it. Now what do we see slow down? The economy. Okay, so when Mike and I often talk about, it's not just interest rates, it's debt creation and people being willing to borrow. Do you see it now? Does it make sense? So in 2024, there's less borrowing. You're not going to the bank going, righto, put it on the mortgage. Let's do the spa. Let's do the renovation. Let's do the holiday. Let's fucking do it with debt and pay it back over time with increasing incomes. Wasn't happening. Lowest that was seen for the last decade. Now, if there's less borrowing, that means less money being created and put into the system. And when we put money into the system, what does it do? It speeds it up, it fuels it, and people spend into the economy. This means that when it slows down, we're further contributing to the economic slowdown. So rising house prices create perceived wealth on paper, allowing people to access more debt and spend it into the economy. That wasn't happening in 2024. Now, conspiracy. But does it then make sense in a nation built on property why people say you can't win an election with falling house prices? You can't win an election in a recession, because what's happening to house prices and what's happening to people's ability to feel wealthy to borrow against their property. So that's where some of that stuff comes from. Now, if you're a politician and you want people to vote for you, are you going to want house prices to be falling or staying stagnant? Probably not. Because if I'm not feeling wealthier, if I can't access more debt to go and spend and have a better life with the money that's created by the bank for me to then go and spend, because my house price has gone up and I haven't really had to do anything for it, fuck you, man, I might vote for someone else. See how all of this stuff is quite crazy and interconnected? And again, this is me conspiracy, like this is me going down and looking at things being like, I kind of see now. Like, of course, if you had a property and you weren't doing anything and you were refreshing a page on a screen and it said that it's increasing, you're going to feel good. And then debt's cheap and you go to the bank or they email you or send you a letter and be like, did you know you could access equity in your property? You're like, yo, money just got created out of nowhere. Fuck yeah, I will spend some of that, because what do we know? Like, we love spending and consuming and doing shit. But now what's the outcome? Well, some of you are facing debt-to-income ratios of 6 and 7 times your incomes, and that's like household income in this day and age as well. But an 80-year-old's telling us, well, we were buying them with 1 income and could pay it and have kids, and we were only purchasing properties for 3 times our income. Something kind of broke throughout there. So yes, all good and well that we can go and access all this debt and keep, the system going, but there's obviously a flow-on effect and consequences of that as well. So who knows what we're going to see, and this is also back to the politicians, why it's hard when politicians are like, they're too scared to say we want to see house prices decrease, because not many people are going to want to see this. Now, I'll give you another quick story. I watched an article recently from not the mainstream media, but outside of the mainstream. Now, it was basically carving up one of the KiwiSaver providers because they came out and said that you need $1 million upwards easily to have a comfortable retirement. And they were getting slammed by different financial advisors and different people. And basically, this media outlet outside of the mainstream was like, interviewing someone else, been like, how realistic is this? This is bullshit. My husband was like, why even try? You're never going to have $1 million, etc. Like, this is impossible. Why would they even say that? This is just rubbing people up the wrong way, all of this stuff. And I was like, wow, that's interesting. Whereas other people would be like, fuck, I need to get going. Like, okay, what am I doing? What's my retirement plan? They're generating conversation. But interestingly, the same commentator then saw someone say, hey, house prices aren't going to increase for 5 years. So then they go and interview someone and be like, come on, please tell us this isn't true. No, that person's inexperienced. They don't know what they're talking about. I've been doing property a lot longer. We'll definitely see house prices increasing. And the person doing the interview is basically like, oh, good. You can just about guess their age as well, and whether they own property and how much they've got in their KiwiSaver and what they're planning in terms of their retirement. I'll spell it out for you. They're older. They've got property. That'll be their retirement plan. They want to see it increase because that's what they've been taught and they think that that's great. They won't be saving any funds outside of their property because why the fuck would you do that when property is the main thing that will generate your wealth? We wouldn't even touch that. So if someone comes along and says you should have a lot of money in your KiwiSaver, of course we're going to attack them and be like, you idiot, don't go and tell people that. So this is playing out all across the country. And it is fascinating once you learn about it a bit more and understand it. So you can see some of this shit and you can have a better level of conversation with other people, whether it's your parents, whether it's your mates, whether it is people telling you in the media what's going on, whether it's your friends. And this now helps you make sense too of like, why are we so fixated as a nation on what property prices are doing each year? And why are the banks making predictions? Like, where were the NZX predictions this year? See any of those? See any of the banks come out and predict what's going to happen with each of the individual stocks and also the NZX 50? Nah. Property prices, though, have a quick Google. Property price predictions 2025. Go and have a look at how many articles there are. Then search NZX predictions. Buzzy. Why is there such a difference? Vested interests everywhere you look in this space. Your job is to be educated and be realistic as to what is going on and why this stuff is happening and who may benefit from this continuing. And will it continue? Probably. But at least you're better educated about what's going on rather than just kind of, yeah, property prices go up and I don't know how and fuck knows, but at least I can borrow against my property and spend it on shit and, my future income's going to pay it back and epic. You've got to have a better understanding in a time like this because we are in a very, very interesting time of money, economies, finance, and also wealth passing down from those older generations to some of those younger generations. It's going to be very, very fascinating to watch play out, and we'll talk more about that soon. Now, if you grew up hearing or learning to put it on the mortgage, hopefully that helps you make sense of what people are talking about beyond the simple saying. Remember, like any debt, I'd be very clear about why you need the funds and whether it's worth a long-term financial commitment. Put it on the credit card is basically the same thing. It gives you instant access to cash. Whether it's a mortgage or a credit card, your future self has to pay it back. Make sure you have a solid plan for that money. Be bolder. You're one of over 12,450 recipients here, over 1.6 million audio downloads of the podcast, and 8,000 subscribers on LinkedIn. We're about to hit 55,000 subscribers on Instagram. Remember, all of this was built from nothing. Go back and listen to episode 1. Someone said the other day, fuck you, you're the same guy. Way more animated and shit now because I know I'm actually talking to people, whereas early days I was having to catch up on some of the episodes, and you try recording 52 podcasts back to back. Well, not back to back. I was doing them in batches and stuff. I had to try and catch back up to the fact you start recording after a year after doing the writing. But, I've now found more conviction in the work that I'm doing and stuff and adding more value. And I get a vibe, as I spoke about on a previous podcast, about the types of people I'm talking to and stuff, and what I can get away with, what I can't get away with, and how to facilitate some of these conversations and whatnot, and just practice and become more confident in myself and stuff as well. Do I claim to know everything? Certainly not. Will people listen to this and probably be more educated than me and be like, oh, bro, you missed this, and this? Epic. Start your pod, start your blog, start your content, get rolling, help other people. But there's some fundamentals in here that can genuinely help people and help you be educated with stuff that you didn't learn about. And I hope that's exactly what you're doing. We've seen a massive increase in people listening to the podcast to start January. Some of January's podcasts are already in the top podcasts of the history, which is interesting. There's obviously a lot of new people listening, so shout out to all of you. There's a back catalogue to help you, and I really do hope that going back to the start of this, you can get some of your goals and outline them and find some of the content in here that will help you get closer to them, because this is a community and a fellowship, if that's a word, where people want to see other people succeeding, and we want to be learning, we want to be challenged. We don't want to always agree, and that's cool, but we want to find things that are going to work for us. We want to look at different things that are going on and be like, yeah, I had never really thought about that before. Like, even the thing earlier about women having to work in jobs, these career jobs and shit, corporate stuff that they don't even fucking deep down want to be doing, but like they've been marketed to by society that they should be, and it's almost like, oh, if you don't do it, we can have better conversations about some of this stuff without being like real triggered and whatnot. So a lot of this shit does come back to money, and the more you can learn about it, the more you can start to take action that's going to help you in a world and a country and an economy where like you don't necessarily get all of this information. Anyway, did you know, according to realestate.co.nz, new property listings in New Zealand reached levels not seen in January since 2015. This could be another quiet year for housing, as much as everyone's saying it won't be. All the economists and predictions were the same thing last year. In 2023, predicting in 2024, 5% increase. Someone even said there'd be 16% increase in 2025. Okay, cool. Well, we didn't see it in 2024. It could be another quiet old year. I said a long time ago, a lot of chat about pent-up demand for a property. A lot of chat, well, not much chat for pent-up excess supply too. People getting excited about, okay, I want to sell this, but I haven't yet. Anyway, we better get out of here. I did have a final point, and I couldn't remember what it was, so I was just kind of trying to talk a little bit further there to see if my brain would give it back to me, but it didn't. But I do feel like it was a real good one. I'm just going to pause for a second and see if I can think what it was. Nah, I just feel awkward that you guys are listening to me pause. Oh, fuck, it was. Oh, I got it. So, the song, right, to start, because I didn't even address the song. You're like, what the hell is this? Where is this bloody tune here?